Greetings, Dr. Jeffrey Scott here. This is my weekend market update for Sunday, December 3rd, 2023. I titled this week, Will Small Stock Momentum Continue? As we really saw the non-MAGA stocks really take off this week, especially on Friday. My email address is hgsidoc@gmail.com. If you have any comments, I'm happy to respond either within the YouTube remarks area, or if you want, you can just email me at that address. Disclaimer, this is for education purposes only. Anything I talk about should be considered in the spirit of education and not investment advice. I'm a doctor, not a broker. I have none of the licenses that would allow me to advise you what to buy. Always consult your own personal financial advisors. I am independent. I do have some indicators in the market, but no one pays me to say good things about them or their tools. And trading involves risk, and you alone are solely responsible for any investment decisions you make. In January, on I think President's Weekend, we have one of the most exciting times of the year, which is the first Wealth 365 event. I will stick this link in the remarks section, and I hope that you can join. That's when I first got introduced to wealth charts at one of these programs, and now I became not only somebody who is a user of the program, but boy, I would say I'm probably pretty much an advocate of it as well. It's really has been a great addition to my arsenal. So, what a Friday. I mean, really, Friday. Look at Russell 2000 on Friday, up 2.9%, on the week up 310. If you look, Dow was up 2.6, the Spider is up 0.8, the NASDAQ Composite up 0.4, the Qs were up 0.1, NYSE was up 1.8. The big move was in the Russell. You look at ARC Innovation, the Cathie Wood, lots of small cap growth. ETF, stocks in that ETF, it was up considerable. It was up 7.9%. So a strong week, especially for the small stocks. In fact, if one looks at the FANG stocks, they were actually pretty flat on the week. As you could see, communications was the one thing down over 5 days. Although I did see somewhere where energy was down, but at least here energy looks like it was relatively flat. So a super strong week, especially for small caps, and what made me happy, for small cap growth. If we look at the Q-Edge tool, you could see that on Friday 100% of the sectors were up, 98% of the industry groups were up, and 93% of the stocks were up. That's a pretty strong session. In fact, it was so strong that we have 88% of the stocks are above the midline of the Bollinger Bands, and that's a massive increase from Thursday. And 23.5% of the stocks are outside their Bollinger Band in the S&P 1500. We're at a point where you almost have to expect a bit of a pause or a pullback. Doesn't mean you have to go back into another bear market. Doesn't mean you have to have a major correction. But when a rubber band gets stretched, eventually it's going to pull back some. If you look how strong this market's been, if you go back a month, 2 weeks, 1 week, almost all the sectors are up, almost all the industry groups are up, and almost all the stocks are up. So I'm sure, like me, you enjoyed November quite a bit if you've been long this market. This is a tool also from Sagar with Superior Profit, another Q tool. This is Q Market Breadth. And I love this tool. It shows me two markets, the NASDAQ and the NYSE had nice breadth signals on Friday. You could see we're up near a recent high. This is a synthetic index. We've had a big move off the lows. But you can also see this little green line is pulling into the top, which tells me the 13-week new high, new low on the market as a whole is getting extended. This is a Nick Drendel spreadsheet. I love this tool because it just gives me such great information. We'll start down here. Notice that 52-week new high, new lows are green for both. In fact, whether you look at 1, 3, 6, or 52 weeks, the new high, new lows turn positive on both the NYSE and the NASDAQ. You don't expect to move up to higher highs without participation, and that's a great thing. You could see here the small cap growth 2.64% change, or the Russell growth, and the ARKK 5.03 on Friday. And you could see the range, everything, even the other indexes, closed near the top of their range um, for the day. And if you look at what moved this week, we've been talking about biotech. It was up 5.6 on the week, and certainly was juiced by ImmunoGen's takeover with a 95% premium. I hope you participated in that. We've talked about it many times over the past year, and I think I talked about it last week as well. Um, Very strong week in the market, and you can see here the only thing of these industry groups that I follow that were down were China and some of the semiconductors. Super, super strong week. If you look at the rates, you could see the 10-year and the 30-year, the 2-year, they all came down on Fed expectations, and those expectations are that we're looking forward to having either a long pause or actually start to get into some rate cuts sooner than later. I'm not sure that's true, and certainly the Fed has tried talking that down, but markets love falling rates, and we had falling rates, and you could see we peaked, we bottomed, and as the rates have fallen, the S&P in yellow on both the 10 and the 30-year, you could see how much it's come up. Recession in the near future, I just say sometime, but not this month. Yes, we've got inverted 10-2s and 10-2 on the right, 10-3 on the left. Yes, the gray bars show a recession occur whenever you cross the zero line, but they always occur afterwards. We're nowhere close to that zero line. If one looks at the Philadelphia Fed, the Fusion Index, looking at economic activity, we're above minus 20. And right now, there's nothing that suggests that we've got a recession coming from a GDP perspective. And if you look here at credit tightness, there's no spike, which you usually get with recession. So, yep, sometime, but not now. Um, if you look at stocks up here, the upper left, above the 200, stocks above the 40, we're getting to areas that you expect a reversal. And here is the T2121 might go to 12-week or 13-week new high, new low. That's in TC 2000, and we are at a point where you always reverse. Now, this doesn't mean crashes in the market. And let's just look back here, for example. Let's look at these peaks, and let's look at, for example, this peak here. The market pulled back a little bit and kept going higher. This peak here, the market pulled back and kept going higher. This peak here at the end of 23, excuse me, in the end of in the summer, it led to a little bit deeper pullback. But typically you get a small pullback and then you move higher. Current buckets, again, as we saw in the Q edge, this is an edge rater, and I just wanted to highlight we are at a point here where we have a lot of stocks, almost a quarter of the S&P 1500 are above their Bollinger Bands, and stocks stay within those Bollinger Bands over 90% of the time. If the entire market starts to move above, you know they're going to revert back to the mean and come back in. So don't be surprised to see somewhat of a short-term pullback coming up soon. If we look at the Hindenburgs, no, we're not going to see one, but I just wanted to point out on the NYSE, we're at 11%, 52-week new highs. That's gigantic, and is certainly something that's exciting but getting stretched. And all the NASDAQ is up to over 5%. You can still see that there was recently some new lows. So the NYSE broad is doing well, but the NASDAQ has turned around with those new highs. Rotation, rotation, rotation. When we look at the strength of the week, if I take all the stocks that are $2.50 and 250,000 shares or higher, and I look at by ERG, with ERG being EPS rank plus relative strength rank plus group rank, the best performance were in the low ERG stocks. So we're seeing, I think what we're seeing is broadening out with the Russell 2000 and smaller cap stocks that are starting to move that have been out of favor for some time. And you could see that even without earnings, low EPS rank had better returns. Low relative strength had better returns. And if you look at a large number of groups that I follow, the only groups that were down were stocks that on the prior week were in the, well, the FANG group and groups from the 24th that had the big volume on the Friday before um, or during the holiday. I know this, I think it was last Friday. Yeah, last Friday was the holiday shortened day. But you could see, I mean, I don't have that many positions for me historically. I've got 15, 12 were up. It doesn't hurt when one of your stocks gets a buyout. I mean, but you could see that everything was up on the week, and hopefully you had a strong week as well. This week, there's still plenty to watch. Factory orders, PMIs, ISM, employment on Wednesday, jobless claims on Thursday, and monthly employment on Friday. So this is a jobs week, and we'll continue probably to hear things out of the Fed trying to talk down the market. We also still have a lot of earnings left, and as I say in the lower right-hand corner, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So market closed out the month of November with solid gains, began the month of December positive note. Friday, new 52 week on the S&P 500, not all-time highs. As you could see, mega caps underperformed the equal weighted RSP and the S&P itself. Um, you know, Fed officials did push back on the notion of rate cuts and lack of further increases. But I think with the economic data, investors sort of, well, I'll show you, at least on Friday, they ignored the comments from the Fed. If you look at the next bullet point, great week for biotech. I've been looking for biotech to move, and my hope is that the Immunogen takeout is going to stimulate more interest in the sector. And as we talked about for the last week or so, um, all of the four ETFs, the spiders, the Qs, the diamonds, and the Russell that I follow have been in a buy signal, but we are stretched here, and it would not surprise me to see a little bit of a pullback. I would also be inclined to think that we are higher at the end of the year than we are today. If you like these types of reports, but you want something kind of short, I invite you to stocksanddocs.com, where most days of the week when I'm not traveling, I put a 6 to 8 minute video up before the market opens, just reviewing my thoughts and sometimes talking about what I'm watching. And again, just to remind you, the Wealth 365 event in the middle of January is really a great opportunity to hear from Rob Hoffman and several other great educators. Time to take a look at wealth charts if you're not already using it, and a chance to buy it and some of the other plugins or marketplace add-ons at some of the best prices of the year. So let's go take a look at the markets. So I want to start with this slide, and this is looking at a 5-minute of the spiders. Here is Monday, flat day. Here's Tuesday, a run up, but Fed speak came back down and really didn't do much. Wednesday, we had some great economic news. I think Wednesday may have been the CPI or the PPI. Big gap up, but the market couldn't hold. I think Waller came out and talked down the markets. Thursday and Friday, I think we had Powell speak, and you can see we didn't do much on Thursday despite good economic news. But then what happened on Friday, the markets just decided it was time to run. And the markets closed right off their highs. And we'll take a look in the daily charts, but it was a super strong day. So big pop on Wednesday, but most of the gains really occurred, if not all the gains, frankly, on Friday's session. If we look at the spider, what I really liked about what happened this week is this here is the all-time high. This here was the high during the summer, and we were struggling to get above this trend line. And what happened on Friday is we decisively got above that trend line and closed well above it. Now, let's hope the trend line will go from being resistance to being support. But that's pretty exciting to me. The Qs had broke out before, really doing nothing, consolidating above it. But as long as it stays above that yellow line, which represents the same trend line, but on the Q, that's got to be a bullish thing. And then also the diamonds, you could see, had a big breakout above that resistance. The one that's lagging really isn't lagging as bad as it's been. Take a look at the Russell, and the Russell, which has come a lot off of its lows, is now right below the anchored VWAP from the prior highs. And we could see here's its trend line. It's got a little ways to run, and pretty soon it's going to be threatening that as well. So I would say for the many, many months, this is the best the market has looked in some time. The VIX here, that would be Thursday. So UVXY shows you what happens when the market's strong. Well, the UVXY is at, kind of almost like all-time lows here. But it's sitting here, lost 3% on Friday, and helping this rally as the dollar is still bouncing around out below the box, below the 50. Love to see it come down further. If we look at commodities, I forgot to do something here. Sorry about that. I could enlarge it. If we look here and we go into the commodities, we can see that gold is starting to run. We talked about gold miners not that long ago. Here's silver. Oil, despite OPEC talking about additional reductions in output in the first quarter of the year, did not jump. Boy, is that different than what happened back here. And I think OPEC has got to be scared when they can't even juice the price of oil by doing cuts. And perhaps it's because of concerns about economic activity outside the U.S. It can't be because we all have electric cars, because that hasn't happened. You can see natural gas continues to be dead. And the other thing that's really driving the markets, as we talked about before, is the drop in rates. So really a pleasing time for the market if you are bullish, but we are overbought here. If we look at my major market indices, you could see we are above the WMA. And let me just do this real quick, because I don't know why a lot of things aren't writing. I do have good internet here, although sometimes maintenance is done on the weekend. And let's just run this over here. And let's go back to weekly market timing model. And you could see we've got weekly bongos are green and all the major indices, and price is above the WMA. And frankly, price is way above the WMA. So small pullbacks here are not going to put us out of a buy market. If we go into the breadth, let's just take a look at a couple of things. I like to look at the TLT versus the SPY. And the reason for that is if we were going to see a recession, you're going to see a spike here. And if you were to look at, let's see if monthly charts will show that to us. You could see here in 2020 and here in 2009 and here during some of the taper tantrum times that the bond spike versus the spider. Well, we don't see that now. One thing that is interesting to me and I think very good for the markets is you could see the equal weighted S&P is starting to outperform the spider. How do I know that? Because this is a ratio chart of the RSP versus the spider. If we're heading towards this corner, and we're pointing there now, that says equal weights in control. If we're pointing down here, large cap is control. If we do the same thing on the NASDAQ and we look at the Qs, same thing. The equal weighted Qs are starting to outperform the cap weighted Qs. For the first time in a long time, the curve of the Qs versus IWM actually has turned down, favoring the small stocks. And if you look at the IBD 50 versus the FANGs, also for the first time in a long time, you can actually see the 50 perking up. And here is the larger XSD from a number of stocks versus the market cap weighted SMH, and you could see that we are now favoring the larger cap, the larger basket, not the larger cap semis. If we looked at what's working on the hourly charts, Look at real estate. They were big winners on the week, especially because of the falling rates. And different than staples and utilities, which really didn't seem to do much, neither did discretionary. Look at biotech. I've been talking about this line we drew weeks ago. I think biotech might be for real here. Healthcare, not so well. These are sector ETFs versus the spider. As we look around, materials have picked up, communications, no, energy, no, financials, absolutely. We talked about regionals on my stocks and docs, I think on Thursday morning, and they've done well. Industrials picking up, technology still done well, but I think they lose their star now because they're no longer sitting in the upper right hand corner, and neither are fangs versus the spiders. So rotation, rotation, rotation. If I go into my scanners and I start to look at what's working, let's go into the um, heat map on the S&P 500, and you could see that even though it wasn't a very impressive day on the, well, it was more impressive on the IWM, it still was a good day on the S&P. You can see lots of green, especially in the large cap tech, although on the week some of these large cap techs certainly lagged the markets. If we look at Wealth Scanner, and this is what's so exciting to me because for so long we had hardly anything above 800 and nothing at 850. And what you're going to see here is that we really have changed. Metals, fintech, real estate, retail, real estate, cloud, e-commerce, cybersecurity, materials, global Internet of Things, think of IoT, data centers, banks, cybersecurity, muni bonds, that's interesting. All these things are above 800. In fact, they're all above 810. That is a sign of broad strength coming into this market, where it's not just one thing popping up and leading. So the next thing I like to do is like to take a look at what's working in the markets and how do I drill down further. Well, there's lots of tools, but my favorite tool to use is my CAT scanner, which is in wealth charts. So I'm thinking, well, I'm interested in small cap tech, but with this broad-based market increase, let's take a look at what's working. So in my CAT scanner, for those who have not seen this before, the key are the dots. And the dots are sitting right here. Simple guy, a gap, a volume, a breakout, and momentum. 4 dots. I have found during my career, just like what we see right here, that stocks that are going to become big leaders will break out with volume, break out momentum, sometimes with a big gap, often coming out of a squeeze. And then I look down here at relative strength versus a moving average and OBV versus its moving average. This red line gives me a sense of how extended it is. When it says it's 100, I'm going to be a little careful here. But I can scan for certain conditions. So my Scott pullback in an uptrend is going to scan for stocks where the weekly has been an uptrend for a while. It's not been that long here, but you can see the weekly is green. That the daily within the last 9 bars gave me a pullback signal. And there's a red pullback signal. And then I like to see dots. So by doing this basic picture, pullback in an uptrend, here's the pullback. This tells me I'm in an uptrend. Find me dots, and then let's find non-extended stocks that have relative strength and volume supporting it. So ESTC must have been an earnings play. There were a bunch of upgrades on the day, but here's a stock that gapped up the last quarter with earnings, and then it gapped up again 3 months later on earnings. Massive volume. My only concern with this stock is it is really extended. And when I see the high jump at 100, it doesn't mean it can't go higher. Certainly does not mean that by any means. But if I was a betting person, it might go up a little bit, but it's probably going to give us a little bit of some type of a flag before it goes up higher. And you could see when it did this move here, It went sideways for a long time. So I think this is an interesting stock. It's going to be on my watch list, but I'm probably not yet ready to buy it. Now notice all these stocks have bullish weekly. The dailies are less than 9. That's how I programmed it. Here's the high jump that tells me up front whether it's extended and how many dots. Next one here is AXL, American Axle. Now I don't love this one, and I don't love this one because it's right below the 200-day moving average, and I went to the school of thought that says nothing good ever happens above the 200. A break above that and a retest I might be interesting. Peabody Energy. Now I've been long CEIX, and I think that BTU is just another coal company that looks like it's getting ready to run. 3 dots, volume, breakout, momentum, coming out of a squeeze. Relative strength and OBV have turned up. It's not overly extended. And this is a wealth signal, which is one of the Rob Hoffman signals, and this is my EMS signal. So I like the setup here on BTU. Cheesecake. I really like this bar here, but it's still got to get above the 200. CSTM, I thought this was construction or mining products. Don't really know that for sure. It's kind of really going sideways, so I'd probably not take that. And here's one that I like and one that I'm already in. FTAI, I drew this line here with a breakout above it, which occurred with breakout, volume, and momentum from a squeeze with relative strength and OBV. We just had another pullback, and it's breaking out again. So I think FTAI is interesting, and I look at the high jump, I see 72%. Therefore, it's not overly extended. IONS is one of the biotechs, and this one is in a nice uptrend. Here's your pullback. Here's your breakout on volume with momentum, relative strength, and OBV. This is the kind of a day where everywhere you look, you're going to find attractive looking stocks. AAOI is a semiconductor stock that just had a nice pop on Friday, and you could kind of, if you squint real hard, and you're a follower of someone like O'Neill, you can certainly see a cup handle and a breakout. So this might be one that's interesting. And I look down here and it is, let me kill that. It is at, why is it giving me a high jump? So it's not at 100 because 100 is up here. So this is getting extended. It's just not overly extended just yet. So that scan is specifically to look for pullbacks and uptrends with my dots coming in, which are gap, breakout, momentum, and volume. I just want to take a look at KBH because I think it's interesting that housing is so strong, and I think a lot of this probably has to do with the fact that people who have houses aren't selling them because they don't want to take on bigger mortgages. And you could see here a nice little flag and a breakout. KBH, Pulte, Toll Brothers, a lot of these things look interesting right here. So these are pullbacks and uptrends. Now, in markets that have been down for a long time, I often look for these things called bottom poppers. So in these, they're all going to have a weekly bongo, which is my trending indicator that's red. And then I look to see who's got dots. And sometimes I can find something I like, but a lot of these have been beaten up for a while. HQY, some of the insurers were working, and this is in that space. ODFL, a trucker, this one's kind of interesting looking because it's been in a pullback, but it had a big move on Friday. It took out its 50. Volume, breakout, momentum from a squeeze, relative strength and OBV. I might put this on my watch list and see what it does. But these are not going to look as good as the others. I can look at rockets. Rockets are things that are really moving, and it might be moving too far to even get involved. So here is a bank, probably not too far. And why do I call it a rocket? Because I'm looking for both bongos to be green, and I'm looking for a stock that's had a move already. So this one's broken out. This looks like so many of the different financial stocks, but even though it's short term getting extended, I like this one. IONS we already looked at. Telephone and data service, I have to admit I don't understand this company, but it's got a nice little saucer here forming. UMBF is another bank. So many of these banks broke out, pulled back, and are running again. I did like Cleveland Cliffs. Here's another stock breaking out. And why is it a rocket? Well, look where it's come from, 13 to 18, which is 5 over 13, which is about 40% since September 18th. That's a pretty big move. I can also look for stocks that just have momentum. I don't require anything else. I just want to see momentum signals. So BHP is another one in the miners. We showed you where miners were strong in many different ways. CCU is I don't know if this is a bank or a miner. It's a international play. But look at the massive volume that came in the stock on Thursday and a big gap up come Friday. Here's ESTC again, Internet of Things, IoT. Boy, this one broke out of this was an area that it could not break out before. Of course, it's getting extended, but that's one that looks very interesting as well. I mean, this feels like a bull market. We have so many things here that are looking interesting. And I'm pretty excited, at least for the next couple of weeks, although, as I've said multiple times, certainly would not surprise me to see a pullback. Now, bear retracements in a downtrend, boy, I wouldn't expect many of them here. Even Lilly, although it's got red dots, still above the 50. Trip.com, the good news is you don't see a lot of things that are weak. So I do feel bullish. We've looked at a lot of positive looking chart patterns. If I show you my buy watch list, let's see. Let's just go to watch list. And I'm going to put my buy watch list up. A lot of stocks made my buy watch. Let's see which ones I'd like to show you. AI. This thing's got a nice steady move here up on the 200. The 17's crossing above. It had breakout and momentum signals come in on Friday. Watch list reasonable. Affirm. We've talked about this before. Cup handle breakout keeps going higher. Be interesting to see if this keeps going. If apparently they don't carry a lot of credit risk like their peers, according to my partner at work, Simon, who is holding this. He's got to be happy. He's kind of not losing money on it anymore. But boy, this stock has had a massive move. It still looks like it could go higher. Agio is typical of a lot of biotech stocks. They've really been beaten up, but this one's moved off the bottom. And on Friday, it had some interesting things. I'm not ready to get into that. Amgen, boy, it's sitting right above the 50, something to watch. I mentioned CEIX. It's very similar to BTU. It's running again. Talking about running again, I wouldn't necessarily buy Salesforce here, but I want to watch it, so I put on my buy watch list. Big gap up. Why wouldn't I buy it? Because look at that 100. It's extended. I'm looking for it to pull back some. Generic, something that's dear to all of us here in Florida because of hurricanes, has broken above the 200. This is a stock that I used to own a long time ago. I've talked about a lot with the chart pattern. Again, am I buying it here? No, but I think I'm going to watch it here because it's starting to look interesting. There's only so many stocks I can buy. But as you can see, there are a lot of things on my list this week. I mentioned Toll Brothers, just basing and breaking out on Friday. And then I was at a John Person meeting this week, and he talked a lot about workaday. This is what happens in a strong market on good earnings. Big gap up, and it keeps going higher. So I've shown you a lot of what I think James Ropel calls candy, good-looking chart patterns. I'm very excited by this market. I'm bullish that it continues to go higher, but I do think a pause to refresh and maybe a small pullback in the short term might actually be healthy. So on that note, have an awesome week. I'll stick a link in the remarks section for the Wealth 365. Please register under my name. It doesn't cost you anything and it makes me look good. And since that's all I'm asking for when you watch my videos, I'd really appreciate it. And I'll see you next week, and I'll see you on Tuesday in stocksanddocs.com. Thank you.